Good morning, everyone. This is Angelos Zittis from IronFX, bringing you the morning comment for the 18th of June. UK's Prime Minister May balancing between camps. According to media, UK Prime Minister's May Brexit plans could be rejected by the House of Lords on Monday, setting the stage for Wednesday's parliamentary confrontation between Brexit hardliners and pro-EU Conservative rebels. Prime Minister May stated yesterday that Parliament should not be able to block Brexit and overturn the outcome of the referendum. On the other hand, a pro-EU Conservative lawmaker warned that the government could collapse over the issue. Should there be further negative headlines about Brexit ahead of BOE's interest rate decision, we could see the pound weakening. GBP USD tested the 132.15 support line and stabilized on higher grounds on Friday and during today's Asian morning. The pair could continue to trade in a sideways manner today, however, it might prove sensitive to Brexit headlines and have some bearish tendencies. Should the pair come under an intense selling interest, we could see it break in the 132.15 support level and aim for the 131.25 support barrier. On the other hand, should it find fresh buying orders along its path, we could see it breaking the 133.30 resistance line and aim for the 134.25 resistance hurdle. US-Sino trade tensions could escalate. On Friday, President Donald Trump unveiled a list of more than 800 strategical imports from China that would be subject to a 25% tariff effective from July 6th, which escalated tensions. Chinese officials stated that China will respond with tariffs of the same scale and strength, and that any previous trade deals with the US were invalid as per news media. According to analysts, despite commodities dropping substantially, especially gold and oil prices as well as US equities, the USD's reaction against its major counterparts was limited until now. Please have in mind that the market may have been expecting both US tariffs and Chinese retaliation acts by some degree. It could be the case that the current escalation limited US dollar gains until now, and should there be further escalation, as well as a spillover of the issue to other countries, we could see world trade dampening. USD JPY moved in a sideways manner on Friday and during today's Asian morning between the 110.40 support line and the 111 resistance line. We could see the pair continue its sideways movement today. However, the pair may have higher volatility if there are headlines about any escalation of the USD-Sino trade conflict. The reason for such a volatility to occur could be the yen's dual nature as a safe haven. Should the pair come in a bull's market, we could see it breaking the 111 resistance line and aim for the 111.60 resistance zone. Should the bears take over, we could see it clearly breaking the 110.40 support line and aim for the 109.75 support level. Today's other economic highlights. We have two speakers, namely FOMC retiring member William Dudley and ECB's President Mario Draghi. For the rest of the week, on Tuesday's RBA meeting minutes are to be released, as well as ECB's economic forum is still ongoing. On Wednesday, the US current account balance for Q1 is due out. On Thursday, we get New Zealand's GDP growth rate for Q1 and the star of the week, Bank of England's interest rate decision. On a busy Friday, we get Japan's inflation data for May, France's, Germany's and the Eurozone's preliminary PMIs for June, as well as Canada's inflation rate for May and retail sales growth rate for April. Please be advised that the OPEC meeting will be taking place in Vienna during Thursday and Friday and could create volatility for oil prices. Please note that oil prices dropped significantly on Friday due to news that Saudi Arabia and Russia have agreed to increase production levels. Also bear in mind that the price of gold has dropped on Friday, as well as analysts cite that the main reason could be the Fed's faster rate hike path or a possible sell-off to counter losses in US shares. For more information, please read the full comment on ironfx.com or download our app and get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Angelos Zittis from IronFX, wishing you solid trading.